Hey y'all, this is Miss Allie and back again for some Accounting 101. And today we're doing the Cash Payments Journal. All right, so up here in the top, I have that as far as the curriculum goes, it is 4.02C. In the textbook, it is section 9-4, which is on page 260. All right, so I'll highlight that for you. All right. Page 260, textbook 9-4. All right, so it tells us that we can use either the cash payments journal, we got it down, the tabs down at the bottom, or we can use the general journal. And I'm just going to show it to you in both of them. Some companies have the cash payments journal because it keeps everything concise in one place of what you have paid out. Some people just use the general journal because you can post everything and anything in the general journal. So our first transaction is February 6th. So I'm going to go over to my cash payments journal, and I'm going to fill in my date, February 6th. All right. I have here for reference my DC Adler, so I can remember that. My debits have to equal my credits. Always, always, always. All right. Debits have to equal the credits. Now I've got to make this look right. Okay. My debits have to equal my credits. Always, always, always. And if it doesn't, then there's a problem. Then assets, drawing, and expenses they increase all the time. They increase on the debit side. They will decrease on the other side. They'll decrease on the cash side, or the credit side, sorry. Credit side. This is a cash payments journal, which means we're paying cash on every one of these transactions. Paying cash on every transaction. So cash will be credit on this every transaction. What we have to do is we have to figure out what's the debit. Where does the debit go? All right, but what it's given to us already that cash is a credit. We just have to figure out where does my debit go. So my transaction over here says paid cash for telephone bill $40, check $123. So in most companies, this would be under utilities. They might have, I don't know, they might have an account that said telephone bill. Since all of these are checks, I don't have to put the C in front of them. Anytime a check is written, it's because a cash has been paid. So there's going to be a check. It's only going to be checks here. Now, utilities expense, I have two debits here. I got debit there, and I got debit here. So I got to figure out which column am I going to put this debit in. It's definitely going to go in cash credit because we paid it out. But is it an accounts payable? No, it's not an accounts payable. It's just a regular expense. So it's going to go in general debit. Okay. So my debit equals my credit. Also, keep in mind that expenses increase on the debit side. It's right here. It increases on the debit side. So yes, this makes sense. And cash is being paid out. Cash is an asset, and it's decreasing, which makes sense that it's on the credit side. My next transaction is on the 9th, paid cash for office supplies. So I have 9, the date, then I have supplies, and I could make it like this, office. Maybe this company separates out. Who knows? They didn't give me this information. They did not give me a chart of accounts to know how they keep, the name of their accounts. So I'm just guessing. Now, again, office supplies is not an accounts payable. It's an expense, or it's supplies. And supplies are assets, and supplies increase on the debit side. So this makes sense for me to put it in the debit side. And the dollar amount is $55. And I paid out $55 with that check, number 124. My debit equals my credit. Again, supplies are assets, so they increase on the debit side. That makes sense. Expenses here here, increase on the debit side. So that both makes sense. We're paying cash out, so cash is an asset, has value and we own it. But we're not increasing it, we're decreasing it, so it has to be a credit. Your debits equal your credits. Next transaction, it's a little complicated. It's on the 15th. And it says that it is paid on account to Massive Supply. So this is an accounts payable, Massive Supply. How do I know that? Because right here it says paid cash on account. Whenever I owe somebody, it's an accounts payable. I'm waiting to pay it. Now the check is $125. Tells me right here, $125. And it says that I wrote my check for $488.04. So I'm going to put $488.04. Now, it's an accounts payable that I'm paying, so I have to put that here. But what dollar amount do I put here? I've written my check for $488.04. Let's go back and look some more. Covering purchase invoice number 90. And the invoice, when I took the stuff away from them, it was totaled at $498. That's what I have to satisfy. That's how much I actually owe them. But at this point, my debits do not equal my credit. So that's when this discount comes in. And it tells me in the instructions that they gave me a 2% discount of $9.96. $9.96. Now, my debit, when I took the merchandise or whatever from them, it said that I owed them $498. That's what I have to satisfy, as that's what I owe them. But they gave me an opportunity to take a 2% discount, which was $9.96. I get to save this. This is like a coupon. I save this, and I write my check for the difference. Now, over here, I did the equation to make sure that it balances. $9.96, if you see up here in the formula bar, $9.99 plus the $488.04. When I add those together, it comes out to $498. So now my credit plus my credit equals my debit, and I'm good. I've paid Massive Supply off, I've saved some money, and I wrote the check for the difference. That's the most complicated these get. The next one is on the 20th. The next transaction is on the 20th. Purchase merchandise for cash. So this is on the 20th. Merchandise is always your purchases, as you're buying it to sell to your customers. Maybe you own a shoe store and you've just bought, this says that you've bought merchandise. You're going to sell this. So you bought shoes for $300. It doesn't say that it's accounts payable. You didn't pay it on account. You bought it. Now your merchandise, you own it and it has value. So your merchandise is an asset. And you paid cash out. So you swapped out one asset for another asset. You just swapped out one asset for another asset. You wrote a check for it. Notice that your checks are in numerical order. They must be this way. If you're ever missing a check, go back and make sure that your bookkeeper left it in the book and wrote void on it. Otherwise, it could look like somebody's embezzling from you. So you want your checks to go in numerical order. The next transaction is on the 26th. and it says that you paid on account to American Supply $2,130, covering purchase invoice number 96, check number 127. This one does not show a discount. So we're just straight up writing them a check of $2,130, $2,130. So my check is 127. This is an accounts payable. It tells you so. Check was written for 130. Who do we write this to? This is an accounts payable, American Supply. Okay, so this account payable, it means that you took merchandise or you took something, their services or their product from them, and you promised to pay them in the future. So this is showing that you paid them in the future. The future is now here. You paid them. Same with this one to accounts payable, American Supply, and you owed them $2,130, and this is showing that you paid them. All right. Now, this, just to let you know, accounts payable, let's just use red. Accounts payable is a liability. Accounts payable is a liability. It's something that you owe to somebody that you have to pay off. It's like a loan. Think of it as a short-term loan. So when you take these out, they increase on the credit side. But when you pay them off and it's on the debit side. And look, these are on the debit side. You're paying them off. And that's a good thing. You don't want to have debt. Businesses, it doesn't look good to have a lot of debt. And then personally, it doesn't look good to have a lot of debt. So you're paying those off. Now, if you want to see what it looks like over here, it was February 6th. And that first one was a utility expense. This time we have to put the C in front of it. Check 123. If I remember right, it was $40, and it was a cash account for $40. Now, whenever you write your account here that's going to be credited, you have to indent. And that goes with the column that's over furthest to the right. The next one said February 9th, I believe. February 9th. And it was supplies, office. And this was check 124. And it was $55. And again, you paid out cash, because cash has to be debited for $55. The next one was February 15th. And you paid off accounts payables. And this was massive supply. And it was check 125. And massive, we actually owed them $498 is what we owed them when we signed the agreement. You're paying cash of $488.04. And the account is usually called purchases, discounts, and allowances. And that was $9.96. Now you're saying, Miss Allie, you're going too fast. Okay, you can go back and watch the video again. And I want to show you here, your debits equal your credits in this transaction. The date goes with the beginning of the transaction. Also, the document goes with the beginning of the transaction. In this case, we got to take a discount. We didn't have to pay all of it, so we wrote the check for $488.04. But these two added together, the check plus the discount added together, give you the total that was due. Okay, go back over and look here. It says the same thing, just in a different format. This says the same thing, just in a different format. But your debits still equal your credits. Debits still equal your credits. Now, the next one was February 20th. And this one we bought. Oh, wait. I got to show you something. You're saying, how did I know that this was purchases, discounts, and allowances? Well, look over here. And this right here says purchases, discounts. Wait, that's the name of your. Let me show you that. That's the name of your account right there that you're using over here. That's where I got that from. The name of it is right here. Okay. So this next one is purchases, and it's check 126. And it's $300. We said maybe we sell shoes. And so we purchased $300 worth of shoes. Purchases, that's our merchandise. And merchandise is sold to our customers. So this is stuff that we have bought. We own this, and it has value. So that makes it an asset. So it increases on the debit side. What's for all of these? What's the credit? The credit's always going to be cash because you're paying cash out. The next one says February 26th. And this one we're paying on account to American Supply because we owe them money. This time it's check 127 and we owe them $21.30. We paid cash. It's a debit to cash. $21.30. All right, so how can I remember these transactions and how can I remember these numbers? Well, I've done this 3 times in a row now. And that's helped my brain remember it for right now, but give me an hour, I won't remember these. Okay? Just human. So you can go back and you can look at it. The cash payments journal keeps all of your cash payments in one piece of paper. So when you get your bank statement, you can actually go check by check and check them off here. I like using this. But if you don't want to use that, that's fine. You can just keep using your general journal. Your general journal, you can post anything in it you want. And there were your instructions. Again, this is 4.02C in the curriculum. And in your textbook, it is 9-4, page 260. I hope this helped you out. If you have any questions, please email me or leave me a comment there. Please think about subscribing to my channel so that you can keep up with these. And I will post them after class each day. All right. Peace out. Love you guys. See you soon and stay well. Bye.